Hey, good morning, everybody. My name is Brent Moores. I'm sitting in for Ben Watson today. Time for trading futures. We've seen a lot of volatility in the markets lately, and of course, that affects futures. And we're going to talk about that today. We're going to talk about some potential, example trading opportunity type events here that we're going to look at. And of course, they're all just examples. Now, of course, I'm joined in the chat by Connie Hill helping me out. I appreciate Connie. I've been working with Connie for many years. And you can follow either of us on X at Brent Moores CS, at Connie Hill CS. We post additional content each day, or most days at least, and that you may find it of interest there for you. So check that out. Also, just a reminder before we get too far into this, that futures and futures options trading involve substantial risk and is not suitable for all investors. And futures accounts are not protected by the SIPC. And futures and futures options trading services provided by Charles Schwab, Futures and Forex LLC. Trading privileges are subject to review and approval. Not all clients will qualify. And futures margin, also known as a performance bond, is the amount of money you are required to deposit in your futures account to establish and maintain a futures position. Futures margin is not a loan. And if at any given time the funds in the account drop below the minimum regulatory requirement or house margin requirements, you may be required to immediately deposit additional funds to maintain your position, or your position may be liquidated at a loss. And for the sake of simplicity, the examples in this presentation do not take into consideration commissions and other transaction fees, tax considerations, or margin requirements. And all those are very significant factors. All investing involves risks, including loss of principal. And for some products and strategies, loss more than your initial investment. Stop orders are not guaranteed in execution. And just let me just add to that a little bit. There are protection points with stops with orders in the futures markets that don't guarantee that they just stop orders may not ever execute. Okay, so just be aware of that. And then also please note that virtual currency derivatives, so we're talking like Bitcoin here, for example, they offer unique and significant risks, and you should carefully consider whether trading virtual currency derivatives is appropriate in light of your experience. The material today is intended for general, informational, and educational purposes only. The paper money software application, which is what we'll be using today, is provided for educational purposes only. And Schwab does not recommend the use of technical analysis as a sole means of investment research. And finally, past performance is no guarantee of future results. Let's head on over to the Thinkorswim paper money software. There we go. So you can see, I see some familiar names in the chat. Glad to have you here, and some names I'm not as familiar with. Glad you're here as well. We're right smack dab at 6,800 on the S&P 500 futures right now. And of course, that's a moving target, but not a huge move today, but we've seen some huge volatility lately. In general, we've been going down a little bit. I just want to look initially at some different markets, some different futures markets, and then we'll go back and I want to talk about some of the basics of futures, talk about trading some of these futures and give you some example trade, pure examples here in terms of trades. But I'm going to go to my futures watch list here, and maybe we can just pick out some, because there's a variety of types of futures. There's these futures such as the broader market futures. Here's the S&P 500 mini /ES. Here's the NASDAQ. Well, kind of looking pretty similar here. NASDAQ is actually up a little bit today. But the general trend of late has been down. Some weakness in the broader market. Obviously, the war is not helping the situation. But the reality is we were going down before then. A lot of that is kind of concerns about valuation, concerns about the AI trade, software as a service, things like that are dragging on the broader market. And with small caps, hey, we got a small cap future here, /RTY. And you can see a similar drop of late. In fact, this is a 5-day moving average, everybody. Because of the speed of the markets right now, if you've watched some of my other classes, my other webcasts, very often I'll use a 20 and a 50-day moving average. I have a 5 and a 20-day moving average just to try and speed things up a little bit for you. And that's one of the first things I want to point out to you. If you're looking for perhaps some quicker moves, some shorter term trades, then you may consider tightening up your technical analysis a little bit to a quicker time frame. So in this case, we're looking at, on my moving averages, I change it to a 5 and a 20-day moving average. So our signals, if you're using crossovers as signals, for example, are going to tend to happen much quicker. If we're looking at it above or below a moving average, that's going to change much more quickly here on this shorter term moving average. And so in the chat, Digan said, can we look at the micro futures? I'm going to look at those in just a little bit here, so no fret there. But I just wanted to look at a slightly broader group here as well. There's a lot of these, and this is a public watch list here, everybody. So if you want to go to the futures watch list, just pull up a watch list, go to public, and you'll see one for futures, okay? And you can pull that up, and then just make sure you have a description column there. And because you're probably not going to recognize a lot of the symbols there. Hey, look, we can go and we can look at different things. You can look at silver. How's silver doing? Well, silver's setting up with a nice possible flag pattern here. When we're looking at this, that's an old drawing there. When we're looking at this and we see, silver went up like this, it kind of pulled back like that, and it's now breaking above this level. That's a bull flag breakout there that some traders will use as a symbol for a bullish trade. There's a lot of different types of futures you can use here. There's a lot of variety in these futures. In fact, let me switch back just for a sec here. Here's some broad classes. There's agricultural futures you can use. Corn, wheat, soybeans, hogs, coffee, cocoa. Energy, we're going to look at that definitely today because energy's in the news. Okay, energy's in the news. And it's not just oil, natural gas, heating oil. There's index futures. We've just looked at some of those. The Dow, the S&P 500, the Russell 2000, the NASDAQ, we looked at some of those there. So there's a big variety of different types of futures trades that you can look at, you can consider. And one way to do it is just to look at the futures symbols here and just go through and look at those. But there is a challenge. And the challenge is this, and for this, let me just look at, let's look at crude oil here for a sec. I'm going to go to CL futures. And you can go, okay, here's your crude oil futures. And you can see this is a daily chart. Now, someone I think could ask is, are these day trading moving averages? No, not these are shorter term moving averages. They're not day trading moving averages necessarily. For day trading moving averages, you're probably going to do something like go to a shorter term chart. Here's a 5-day, 5-minute chart here. And we can see on this, you still have moving averages on these. This is a 20 period moving average. And so when you're on a 5-day, 5-minute chart, each period represents 5 minutes worth of time. So 20 period times 5 5 minutes. Basically, that's 100-minute moving average there on this. So much quicker there. So if you are looking at shorter term trading, intraday trading, then you're probably going to use one of these shorter term charts like a 5-day. And then you can use the same technical analysis that you learn elsewhere. For example, maybe you are going to do something like look at the trend. Look, we've got a trend. There's a trend. That's on a shorter term chart. You can do that. You can look at your moving averages. Of course, this trend is suspect. We're right there right now. And you can look at your moving averages. Are we below our moving average had a crossover? Short term, that's more of a bearish sign on this. Now you're looking at crude oil and you're going, wow, it's been going crazy up lately. Well, intraday, not so much. Okay, right now we've had a pullback. And that's on the 5-minute chart. Do this. Here's a 1-minute chart. Okay. And you can look at this. We can zoom in. Here's the 1-minute chart. And you can see the significant weakness we've had there on this. Now, for these futures, when we look at these, and I'm just going to switch quickly back to, we'll go back to the 6-month chart. And you can see the run we've had. But when we're looking at something like oil futures, one thing you can do is you can go to the Analyze tab. Okay. Now, someone was asking about a list of cash settled versus physical settlement. I don't have a list for you, but you can tell if you go to the Analyze tab, the fundamentals. Let me just close this left column down here for a sec. If you go to fundamentals on the Analyze tab, you can see right here the type of settlement that it is. Okay. But here's the thing. It's important that you know some of the characteristics of futures, because with futures, there is significant risk. There's significant leverage with futures. Here's the price right now, 87.94. Now it's a moving target, so it'll move as I talk. The minimum tick value on this is 1 penny. That means the last digit here, right here, okay, can move by a penny. 9 to 7 to 6 to 5 to 4. That can move like that. Some futures, and we'll look at some, don't have that. Then maybe they'll have a 5-cent tick value or a 10-cent tick value or a dollar tick value or something like that. Where if it's a dollar tick value, this wouldn't be going from 00 to 01. It would be going from 00 to 00. Just that this level would change on that. Or if it's a 5-cent, this would change from 95 to 90 to 85 to 80. Okay, but in this case, we're looking at a minimum tick value of a penny. Each penny move represents a $10 move. So you can probably get some idea here of how quickly this can move. And leverage is great when it goes your direction. When it goes against you, that can add up to a lot of losses quickly. So there's a multiplier, 1,000. In other words, every dollar move on this, and you could do the math on this, just looking at the penny, every penny is $10. Every dollar move on this is $1,000 in your account. Okay, either to the good or the bad there. Well, maybe you go, well, a dollar's, maybe the dollar's a lot. You can tell a dollar's not a lot in this. Yesterday, and admittedly it was a massive move yesterday, but it was up from 81, it was like almost a $40 move. That's like a $40,000 impact on your account there. So there's an alternative that some people use, and they're called micro contracts. Now, keep in mind, micro contracts still involve a significant amount of leverage and other risk. Large losses can still occur with small movements with micro contracts. But here's a list of micro contracts. Again, it's a public list. You can pull up micro contracts. And not every futures contract has a micro equivalent. But on most of them, you'll notice it starts with an M, /MCL. And when you look at that and you go to that Analyze tab, instead of that $1,000 multiplier, there's a $100 multiplier, 1/10 of the amount. Well, that's a little bit more reasonable for a lot of traders. Yes, there's still a lot of leverage, a lot of risk, but those moves, you can see there's a much lower amount of, there's a lesser amount of leverage on those. Okay, it's still significant risk, but lesser leverage. And so if we're looking at something and we're looking, say, a $5 move here, that's $500 instead of $5,000. Now you'll see I have a script on the chart. So you don't actually have to go here, in this case, to go to this page that I just showed you with the script. If you don't have the script, I know a lot of you who have been in this class are already aware of the script. If you're aware of it, if you have it, I'll make sure it's in the description of this class, but also I'll put it in the chat here today. So I just put that script in the chat. Just remember, scripts are not guaranteed for timing or accuracy on those, but it is quite convenient here to have that script. And then when we're looking at this and we're going, oh, I have interest in trading this, you can quickly see that info here very quickly. So let's look at a potential trade on this. This is just going to be an example trade. Well, you have to decide anytime you're doing a trade, whether you're doing futures or options or stocks, you kind of have a theory you're going with. And the theory is, or bullish or bearish or neutral, I guess, is one of the things. What's going to impact this? Oil obviously is impacted by what's going on in the Gulf right now, in the Strait of Hormuz right now, with the war. It's settled down quite a bit. I mean, yesterday we hit right about $120 a barrel on crude oil, WTI crude. And you'd see a similar move, by the way, on Brent crude as well. Brent crude, the symbol is /BZ. But here we're going to deal with WTI. This is the micro contract. And you can say, this war, nothing's going to get better quickly on this. And therefore, I think it's still going to go up. Okay? You could take a different tact and you can say, hey, I think the oil prices they got spooked a little bit. It's probably not going to go down to $50 anytime soon, or $40, $60 anytime soon, but maybe it'll pull back here. And if that's the choice you have the choice to do a trade to take advantage if this goes down, okay, if this goes down in price. So I want to give you an example of those. When you're doing futures contracts, you either have the choice of going long, in other words, you buy it, that's a bullish trade on this, or you can go short. And when you short, you're short selling it. It's a forecast that it's going to go down in price. Now, there is a challenge when you short sell, and that is, where does the losses stop? If this goes up and up and up, what's the maximum price of oil? Well, there is no technical maximum price of oil. Oil could go up. There's an unlimited price, And so with short selling, it's an advanced trading strategy involving potentially unlimited risks. Selling to create a short position carries unlimited risk of loss, and there's no limit to how high the price of a product can go when you're trying to buy a cover position. In other words, you short sell it, but then you got to buy it back at some point. Okay? Now, Mary pointed out something some of you may or may not be familiar with. Mary said backwardization at the moment. What is that? There's two states kind of in the futures market. Not specific to oil. There's what we call contango. Okay? There's also what we call backwardization. And the kind of normal state, the more typical state is as you go out to further contracts that are further in time out, you can see there's different contracts. I'm on the trade tab here, by the way. The prices tend to get higher as you go further out. Well, in this case, when you look at this, look at the prices. They're actually go down in price as you go farther away from the current day. That's backwardization there. Okay. In other words, some people would interpret this as, well, people in the future are expecting oil prices to go down. Okay. And that's certainly one piece of information that could help you with your forecast. But right, we never know. We never know what's going to happen. But let's say we're going to do this short trade, and I already mentioned the risk of this. If we're going to enter this trade with a short trade, assuming in this case that in the short term, we're probably more likely to hit, we'll say, down here, maybe around the 75 level, than up at, I don't know, back up at the 95 level. This is speculative. But this is going to be our target down here. This is going to be our exit, our stop, if the stop gets filled. Again, there's no guarantee the stop is going to fill there. We have those protection points we mentioned, which means the stop could never get filled on that. But having said that, at first glance, did I say stock? I meant the future would never get filled. Apologize on that. The future. The future would never get filled. Well, look, right now we're about $88. If indeed the future were to get exited at the 95 level, that would be about a $7.7-point loss. Well, each point is about $100, right? On this micro future. Remember, that would be $7,000 on the full-fledged future, not the micro future. So it's important when you do the trade to have some idea of that, with the recognition that it could be worse than that, but that at least gives you an idea. What about the gain? Well, going from 88 down to 75, that's a 13-point move. 13-point move times $100 multiplier, that's about a $1,300 move in your portfolio in that case. But how do we do the trade? Well, here's how you do the trade. In this case, it's trading the future is similar to trading the stock. You could right-click. You can go to sell custom. I'm going to sell custom because I'm shorting this. And I can do an OCO bracket. It's going to load it up like this. The first line here is a sell order. Okay? Just verify your quantities. Should be 1 here, but you can change that. Just be aware of your risk always. And here's my entry price. This is an OCO order. It's a first triggers OCO order, which means the orders to buy this back aren't even going to come into effect unless the first order to short the future is filled. Okay. But then we had a limit price. The limit price is the target price. That's the target price on this. And so let me go. Right now we're at about 80. Let me unlock that. Here's our current price on this. And we said the target price was going to be 95. if the future hits 95, and I'm going to make that good till cancel, and the target price in this case, we said was going to be 75. Again, that's going to be good till canceled. Okay. And then I'm going to confirm and send. And I'm just going to put that in the account here, and I'm going to click on send. Make sure you read through this, by the way. Make sure you read through this. Buying power effect. There is a buying power effect. The buying power effect is going to be different. The margin requirements, by the way, on each futures contract is going to be different there. So just be aware of that. Okay. So that is a bearish trade on the micro crude futures contract. Hasn't filled yet, but we'll see. Now, if I wanted to fill it, I could move that limit price. I can tweak that limit price just a little bit. If you give it a few minutes, there's a decent, yep, it just filled. There we go, as we spoke, okay? So, and there we go. Okay. Let's go and let me do let's look at another example, okay? So let's look at silver, okay? Someone mentioned silver. We looked at that in the chat earlier. This is a silver contract. This is what the full-fledged silver is. And let's do the math that we've done before. It's a $5,000 move, point per point. So sounds like a lot. Maybe it's not as much. Well, let's see what we got here. Today we're up about 4 points, but that's a smaller candle. I mean, a few days, let's look at this candle here. This candle went from about 118 intraday down to 75. Well, let's see, 120 down to 80 would be about 40. That's like a 45-point move. Think of the amount of money that moved on that day. 45-point move on the future times a $5,000 per point move here on this. That's a lot of money there on this. And so is there a micro contract? This is actually a little bit different than other ones when we're trying to find something that's there. It doesn't have, it's not MSI, which is what maybe you would expect, but it's SIL is what we're going to be looking at. So here is SIL. Point value, instead of $5,000, $1,000. So little better problem, but remember that still is a lot of leverage here. And again, this is an extraordinary move on this particular day, but you know, even on a day like this day, which is big but not unheard of, it went from 90 down to below 80 on that day. So that, you know, that'd be like a 10,000 point move on that day. So just be aware that even though it is a micro future or a smaller contract, there is still there's still significant margin requirements on this. Here's what I'm going to do on this. I'm going to use technical analysis, that we often do, and I'm going to do what I kind of mentioned before, and that is I was going to look at kind of this flag pattern. And with a flag pattern, you have a flagpole. That's basically the distance between the low, which we're going to call right here, which is about, probably 73, and the high, which is right here, which is probably about 98. And that's a 15, no, that's a, what did we say, 73 to 98 is about a 25-point move. Well, let me just double check those prices a little bit. Let me get out on my drawing tool. Was our low here genuine? Yeah, we're going to call that about 73. and our high a little less than that. So we'll say about a 23-point move. And I'm just going to take that move from the bottom here. Now, sometimes with flag patterns, some people will say, hey, look, the move, we're only going to measure that move on the breakout. In other words, if this is the flag pull and this is the flag, we're actually going to start the measured move from the breakout. I'm going to take a more conservative stance and take it from down here, okay? So, and I'm going to do that 23-point move from down here. So I'm going to say our target's going to be about 103. About 103 on the future. How do I get that? Well, it was at 80 was our low, added 23 points, I got 103. So let me just do this. I'm going to say 103 is our target, and I'm going to do a stop. I'm going to do a stop below this low price here, okay, in case it goes down. I'll go down to about 76, okay, about 76. And this is going to be long. We're not going short here. We're going long here on this. We're going bullish on this one. But the same is still true on the stop order. There's no guarantee it's going to fill. We could hit a protection point. It's just, and even with, even if you're talking about a regular stock, we're not guaranteed on a price. On this, not only are we not guaranteed on a price of a fill, we're not even guaranteed of a fill. But that's what we're going to do. So 103 target, 76 stop here on this. Okay. And we're going to do that. Okay. We are going bullish on this trade. In the chat, Wiley said, well, we could do /SIC. One thing, and I'll get back to this in one sec. You can check with different contracts. One thing I would point out, and just be a little careful on when you're looking at contracts, is look at the volume of these being transacted, okay? There's a volume column here on the trade tab. And if you go to sum, well, let's look at SIC here for a sec. Okay. So, and that's not terrible. That's 9,000. That's actually just fine. And you can do that. But if you go to some contracts, let me go here just to point out to you. If I go to, say, wheat futures, what's our volume is about 48,000. That's fine. Sometimes you'll see some contracts that are in the very low here. And I'm not going to find one right now as I'm looking right now. These are all actually fairly high. Sometimes you'll find them in the hundreds, not the thousands, I guess is my point. So just be aware of the volume. Just see if there is any. Yeah, here's the one, oats futures, okay? The oats may be fine. You may think this looks great. Volume's a little thin there. If you're not in 4 digits, that is probably pretty thin volume. So good point there, Wiley. I appreciate you on there. Let's go back to this trade, though, not this trade. We were doing SIL, okay? And we're going to do a similar thing, but we're going to do a bullish trade here on this. I'm going to right-click on this. I'm going to buy custom with an OCO bracket. I'm going to unlock that. I'm going to make this, we have a limit order, we have a stop order. I'm going to make them both good till canceled. And our target was 103. 103. Our stop is, I wrote it down, 76. One contract. Make sure you realize, well, let's kind of do the math. Even though it's not guaranteed to get us out, we should know the difference between 89 and 76 is about 13 points. It's about $13,000. So as Wiley mentioned, you could do SIC/SIC. And in general, you would see probably a similar point move in terms of the contract, but the point value may be different there. But there's that potential example trade there on that. And I'm going to send this order, put that in. Just make sure you read that order ticket before you actually submit that order on that. Okay? All right, let's look. We got a little time, and I'm going to do, let's look at one more. How about? Okay. So, oops. We looked at silver. We looked, by the way, you can do gold as well. Often gold is going to look relatively similar to silver, not always. Silver of late has been more volatile than gold. Again, kind of a bull flag pattern. So I probably won't do the exact same trade here on this. But one thing you can do is you can also consider, hey, instead of the bull flag, the trend on gold for a long time. Here's a 3-year trend on gold. I mean, the 3-year chart on gold. This is weekly data. So let's do what we said before. This is a 5-period moving average and a 20-period moving average. So this is a weeks. 20 weeks times, if we did 5 trading days in a week, that multiply that by 5. This is basically a 100-day moving average here on this chart. Okay, 100-day moving average chart on this chart. And so longer term trend is up. So instead, you can go out a little longer on this. But the same thing is going to apply here. If I go to the regular full octane contracts, futures contracts, I have a $100 per point move. Let me go back to here. And you go, well, $100 per point, that's not much. Well, look, this is an expensive thing. Going up from 5,200 to 5,400, I mean, that'd be a big move for a few days, but give it a week or two, that it could be there. Or similarly, it could go down. So if you're talking about a 300-point move, all of a sudden that 100-point value becomes pretty significant. Well, again, we have that micro contract that you can use. And instead of the 100-point value, there's the 10-point value. Looks a little bit better there in terms of, when I say better, I mean less leverage, even though there still is potentially a lot of risk and a lot of leverage on that. So let's consider that. Now, on the trend trade, I'm not going to do a target price on this. I'm just going to do a stop. And I'm going to say, hey, on this, we're just using some technical analysis here. On this, we had lows, higher lows, higher lows. I'm going to assume those are going to continue. And if it breaks down, we'll go down to about 49.50 maybe. We'll look to exit. 49.50 on the futures contract. We'll look to exit. So that's going to be my stop, 49.50. I'm not going to put a target price on this one. So what I'm going to do here is that I'm going to just right-click. I'm going to buy custom with a stop. And I'm going to say, well, I'm going to make this go till canceled. And we said 49.50. Okay, that's that, which is roughly a 400-point drop in the contract. Well, what we say on this? We said point value's 10. So I got to multiply that by 10. So we said 400 points times 10. That's about $4,000 risk if we were to get out at the stop price. Again, at the risk of repetition, there's no guarantee of that. But ask yourself when you're doing this, are you prepared for that? This is just a longer term, and we'll say longer, intermediate term, more of a trend trade. So you may go, Brent, why are you not putting a target price? Very often, there's a distinction between short-term trades and what I'd call more of an intermediate term trade or a trend trade. And on the short-term trades, very often we'll put those target prices on. With more of a trend trade, we're going to say, hey, this can go up and it can go down a little bit, but as long as a general trend is going up, we're going to weather some of the pullbacks along the way, as long as that we keep getting those higher lows along the way. That's the goal on that trade. That's the rationale on that trade there. So we're going to do this. And we got that set. I'm going to click on confirm and send. You're going to make sure you read each line here on this before you trade. And you got your buying power effect. And just a reminder on these when we are doing these trades. There's a maintenance margin requirement that you need to keep on the trade there as you do this trade. And so I'm going to go ahead and I'm going to send this order, and there we go. Now, for each of these trades we did 3 examples today. We did an example on silver, we did an example on gold, we did an example on oil. For each of these examples, we used kind of a technical analysis approach in terms of coming up with a forecast. Or you may have a different idea on that. For example, you may think gold is overbought and you decide you want to short it. Fair enough. You may think silver is overbought and or is going to hit a resistance or something. And we're going to look for a bounce off that. Or maybe you're looking at oil and going, well, oil's been going up. I'm going to consider this trend not as something that's more likely to revert to the mean or revert back at least. In other words, we're going to view this as just a trend and not as an overstatement of what, over fears perhaps about the market. And in that case, you could have done just a long contract there. So these are just examples. They're not meant for you to trade. And I would always encourage you, start out with paper money here on your trading, especially with futures. And you do need to be approved for futures here. Okay. So there we go, everybody. Hey, I appreciate you all joining me today. I think Ben's back next week, but he let me sub for him here. So I'm grateful to see some familiar names here in the chat. Our Investing Master Series is coming up at 11 o'clock Eastern Time. And appreciate Connie for helping me out in the chat. You're wonderful, Connie. Appreciate you. And everybody, I hope you have a wonderful rest of the day. And we'll see you all down the road. Bye-bye, everybody.